What's up, traders? Do we have some interesting things happening in the market right now, and we need to be prepared for it? So I'll give you some information so you are prepared for next week. I'll tell you what I think about the markets currently, where I think we're heading for the future, and we'll take a look at some of your favorite stocks and see which option strategy would be best to trade them currently to get our highest probability of profit. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader, and I bring in multiple six figures a year from the stock market, and I use the money I make from the stock market in order to pay for my entire lifestyle. Now, first things first, I need you to smash the like button. Yes, you right there. We need to get this video to at least 1,000 likes, and I cannot get there without your help. So if you could just gently tap it, or you can punch it, or you can elbow it, however you want to do it. I just need you to connect with the like button. And go ahead and subscribe while you're at it. And do remember that I'm not a financial advisor, and this is not financial advice. All trading comes with risk. I'm just showing you how I've built wealth over time. Now, before we get started, I have to shout out one of our members in the community. They wrote a post essentially just saying their appreciation, and we share our wins within the community all the time. You know, with this person saying they made that much, this person saying they made this much. However, it's much more impactful when a person tells me the transformation that the community has made for them. So my guy Ryan said, Rashad, you've been on a tear with these weekly, bi-weekly, and monthly income trades. It's quickly passing my full-time income. Just wanted to say I appreciate so many trades these past few weeks. And then one of our other members, Jay, responded absolutely. And then I just commented and said, man, you don't know how happy this post just made me. I pray you soon feel the freedom of knowing that your 9 to 5 can simply be an option in the future. And that's the entire reason that the community is called Trade to Freedom, because that's exactly what we're trying to do. We just want to use stock options as a tool in order to build wealth, which when we build wealth, we can buy our own freedom back. All right. And one definition of wealth is the ability to do what I want, when I want, with who I want, for how long I want. And if you get that ability, then that is great. However, once you reach that point, then the real definition of wealth is the ability to bless anyone at any time with anything. All right, so we had a bunch of people share their wins for this week. However, I wanted to highlight Ryan because it sounds like an amazing transformation is in progress. But if you would like help making that type of transformation yourself with your wealth and your income, come join the Trade to Freedom community. The link is in the description below. But not only will you get to see my exact trades when I enter them, but you'll get my full options framework via my Trade to Freedom course. Thirdly, you'll get access to ask me questions at any given time. And lastly, you'll be within a community of other traders who all have the exact same goal as you. So if you are still looking to make that type of transformation in this year, in 2025, then come on, we would love to have you. The link's below in the description, but let's get back to it. But let's discuss some of the events that happened in the market this week. So on Wednesday, we got the CPI readings, and it showed that inflation still not showing tariff-related spikes. The inflation came in at 2.4%, and it was expected to be 2.4%, so it was right on the mark. But we are still very close to that 2% mark that the Fed wants in order to start cutting interest rates. But the fact that CPI has not gone up, even with more tariffs than we had previously, that is a good sign for the economy. And then on Thursday, which was yesterday, we got our initial jobless claims, and they pretty much held steady at around 248,000. And that is still pretty high. Now, eventually, if that number continues to grow, because the Fed has a dual mandate, which is one to keep prices low and also maximum employment, whichever one is worse at the time is typically the one that they have to put more focus on. And seeing that inflation is at 2.4%, it doesn't seem like a huge risk factor as of right now. However, our unemployment is still at an 8-month high and came in 1,000 points higher than what was expected. So if this number continues to grow, then that could be a good sign that the Fed is going to cut interest rates sooner rather than later. And speaking of interest rates, let's look at the CME Fed Watch tool. All right, so this is interesting because we will have a Fed meeting next Wednesday. And they're saying now there is a 3.1% chance that they cut interest rates. Now, the reason that is interesting is because just 2 days ago, it was a 0% chance. And then 1 day ago, it was a 2.6% chance. So for the last 2 days, the chances of an interest rate cut have gone up, albeit just so slightly, but it's still going up. All right, so they are currently pricing in a 3.1% chance for a quarter-point interest rate cut for next week's meeting. And then if we look at July, we can see that it is now a 22.5% chance that they cut for their meeting in July. And then if we go to September, this is when the cut is actually expected to be. And so if we look at that date, we can see there is a 57.8% chance that they do a quarter-point cut to interest rates. And then we may see 1 or 2 more in October and December. But now that the tariff drama and the constant headlines have kind of died down, which part of that is just investors and traders becoming numb to seeing a headline about tariffs every single day for the last like 3 or 4 months. All right, but now that we are moving from tariffs, now the big thing in the market is going to be about Fed interest rate cuts. And so investors will be paying close attention to every single thing that Fed Chair Jerome Powell says this coming Wednesday. And if he says any mention of a possibility of even cutting in the near term future, you will likely see the stock market rise from there. But now let's take a look at the S&P 500 and see where we may think it's heading from here. So we can see that we are having a slight pullback today, market down 0.86%, and that is mainly due to Israel attacking Iran, which has also caused oil prices to go up as well. Now, does this drastically impact the US stock market in the long run? I don't think so. However, this could control the headlines for the next few days until we get to Wednesday, where we will have the FOMC meeting, and then all attention will transfer over to that. However, what this could cause is a much better entry point for a lot of our trades, because I do think that we will have a slow move up in the market and that the S&P will finish much higher to end 2025 as our companies are doing amazing. All right, earnings season is pretty much wrapped up, and we can see that most of our companies have had amazing growth, with many of them even raising their guidance for the next coming year. And honestly, if we would have never had all of this tariff news headlines, we would have never gotten this little pullback here. But now we know that our companies are doing even better than what was expected. So although we are having this little pullback today, we're currently at 5,987 on the S&P 500. I do think that by the end of Tuesday, we'll at least stay above 5,900. And then on Wednesday, we'll have the FOMC meeting. And then from there, it's going to be all about what and how Jerome Powell says what he says. But for the rest of 2025, I am very bullish on this stock market. So let's take a look at some of the most popular stocks and determine how we would trade them and the best way to make profit off of them currently. All right, so the first stock we're going to take a look at is SoFi, ticker symbol SOFI, and we can see it is down 5% for the day and is currently trading at $14.15. Now, this stock has had quite the run up. It hit a low of $8.60 on April 7th after all of the tariff headlines, and then hit an intraday high just yesterday of $15.20. Now, both the members of the community and I have been making a killing off of this stock over the last few months. But we can see here it was trading above the Bollinger Band, and like I always say, it usually only stays out of a Bollinger Band for a few days, and what did it do? It popped right back in, and that is perfect because it's creating a better opportunity to get into the stock now. So I will tell you that us in the community, we have been selling puts at the $13 mark, because I believe in the short term, it won't go any lower than $12.50. And the reason I believe that is because it has a lot of support right above that area. So if I pull up the 200-day moving average, we can see it's at $12.70. And then the 50-day moving average is at $12.68. So there's a lot of support above that $12.50 mark. So we're going ahead and we're selling puts at the $13 mark. And that has been working out very great for us. Now, I said in the community earlier, what I love about our strategy is there's really not a bad day in the market for us. It's either one, the market is green and we get to watch our flowers grow, aka our profits, or two, the market is red and it creates better soil for us to plant our seeds for our future profits, aka our future flowers. All right, so I'm either reaping what I sow either now or later. It's just one of the two. So I am fine with green days, I am fine with red days. So I am liking that about SoFi, and I'm obviously not the only one placing big bets on SoFi, because there are people with even deeper pockets placing bets almost every single day on SoFi, and let me show you. So here I am on the options flow tool for barchart.com. Now there is a link below in my description where you can get a free 30 days for barchart.com, but I use this tool in order to see the trades that people with large pockets are making. So now we're looking at trades on SoFi, and we'll go back for a few dates, but now we're going to look at June 12th. But we're going to look at any trades that were over $100,000 and were bullish. And one, we can see the net trade sentiment for the entire day here. And so that just shows throughout all the bullish and bearish trades on SoFi for that day, that there was a net of $698,200 on the bullish side when it comes to the trades. But if we look down here, someone placed a trade for $570,000, $487,000, $421,000, and you can see how that pattern goes on, but that is just for that day. Let's go back to the day before. So now we'll look at June 11th, which was 2 days ago, and we can see the net trade for that day was $1.1 million. And so there are a ton of trades here, 256,000, 156,000, 154,000. And then if we go back to June 10th, well, there was a net trade sentiment of over $2 million for that day. And someone placed a $468,000 trade, 263,000, so forth and so on. And so this just helps me see what people with large pockets are doing. Now, I never blindly follow what these people are doing. However, if I'm already bullish on a stock and I see that big money is coming into this stock as well, well, then that just comes as another point of confirmation for me. But now let's go ahead and take a look at some possible trades for SoFi. Now, we are here in the options chain for SoFi. And the first thing I want you to notice is, yes, I put my money where my mouth is. If we look at all of these red markers, that shows you each date that I have a current trade on SoFi. All right, so I have one 20 days out from now, 28 days out from now, 35 days out from now, and 45 days out from now. However, if we were going to place a trade today, then we first need to select our expiration date. And for this, let's say we select the date that's 28 days out from now. And if we come over to the put side, I would likely come over to this $13 strike, and we can see it pays anywhere between $33, $35 right here, right now. And that is almost a 3% return on your money for the month at just a delta of 0.24. Now, if you're familiar with my content, you know I typically stay at a delta of 0.20 or lower. However, if it's a stock that I'm very, very bullish on, then I will go a little higher. But a 3% return sounds good to me. And SoFi is a great stock for people with smaller accounts, because if you are fine with buying the shares, then because every contract is worth 100 shares at a $13 strike, you are just buying $1,300 worth of the company. All right, but that is how I would trade SoFi right now. I wouldn't necessarily buy leaps on SoFi because of the recent run-up that it's already had. And so selling puts will give us that margin of error and allow us to generate income off of SoFi until it is time to buy leaps. But now let's look at our second stock, which is Nvidia. All right, what a run Nvidia has been on as well. And this Nvidia run is partly due to the decreased tensions between US and China. But to be honest, Nvidia should have never been trading down here in the first place. Nvidia is one of the most fundamentally sound stocks in the entire US. And actually, it's pretty unprecedented for a $3 trillion company to be growing as quickly as Nvidia is. So I am still very bullish on Nvidia. And actually, even while trading at $142, and we can see it's down about 2% for the day, we can see that looking at analyst ratings, it still isn't even near the mean target. The mean target is $173, and all 44 analysts who are covering the stock still have it as a strong buy. All right, even with some analysts having it as high as $220, and some crazy analysts has it as $100, which that's just insane. I can tell you one thing is, when the stock went down because of the tariff headlines and it was around $100, we were absolutely trading this and we made a ton of money off of it. Now, where do I think Nvidia is heading from here? I think there's a chance that it kind of consolidates for a little while between the $130 to the $150 mark. So we can see the all-time high was back on January 7th at $153. And so not only will the 150 mark be a point of resistance for traders, just because of the psychological part of it being a whole number, but then also you have the all-time high just right above it. So it's going to take a lot of buying power in order to get above that. However, it does look like it may have started to create somewhat of a small support level right here at $130. We can see how this just kind of bounced off of it and went higher. But even if that support level doesn't hold, then we have the 200-day moving average just right under it at $127. So I think that it is a good bet in the short term that it does stay above that point. So with it being so close to the all-time high, I probably wouldn't be buying leaps on Nvidia as of right now. What I would do is I would sell puts anywhere below this $127 mark. And likely the stock will stay above it. And if it does, we get paid just to wait around. However, in the slim chance that it were to drop below the mark that we set, then we get the ability to purchase an amazing company at an amazing price for much cheaper than it was on the date that we first looked at it. And to me, that sounds like a win-win. But let's go into Thinkorswim and see what our exact strike price would be. All right, so now we're in the options chain for Nvidia, and we could just select any day up to 45 days out. So let's go ahead and let's select this 35-day out from now expiration date, and we'll just come over to the put side. Now, remember, I said that I think it will have some good support at $130. However, if you want to be even more conservative, you could go with the $125 strike, and either one is fine. But let's assume you wanted to go with the $130 strike. You would get paid about $242 per contract for opening up this trade right here, right now. And as long as the stock price stayed above $130, you just keep your money and you go about your day. However, if the stock price were to drop below $130, then you still keep the money you were paid. However, now you get the privilege of buying a stock that you really want to purchase at a lower price than what it was when you first looked at it. All right, so that is the win-win situation. At the $130 strike, it is a delta of 0.22. Now, typically, I stay below a delta of 0.20. However, when I am very bullish on a stock, then I will, yes, absolutely go higher. And so 0.22 is not that much higher, so that works out great. But now let's take a look at our third stock, which is Palantir. All right, so Palantir, good old Palantir, is actually one of the few stocks that are up currently. All right, so up 2.3% and is $138. And Palantir is an amazing company. However, I do think that it is a bit overpriced as we speak. And typically when you see companies that are vastly overpriced, you get wild movements in the stock. And that has been the case for this stock this year. Now, we're looking at the weekly chart right now. However, if we come over to the start of the year, we can see it was around a low of $65, and then it rose up to a high of $125 around February 17th. And then it dropped all the way down to a low of $66 around April 7th. And now it is back up around $138 currently. And so that is a wild ride in the span of 6 months for a company as big as Palantir. Now, I do love how Palantir has continued to grow their business. They have a CEO who is continually focusing on making the company even better. And he is focused on ways to make his stock go up. And so I love that for Palantir stock. And so while I have traded Palantir in the past when the stock was much cheaper, it's personally not my favorite stock to trade as of right now. Now, I was trading it back here last fall and last winter, and I was making plenty of money off of the stock. But now that the stock has essentially 7x'd over the last year, I'm kind of a more let me wait and see how the stock moves and see what its next support level will be. Now, we can see over the last month, it's kind of created a support level at the $120 level. All right, so these are the weekly charts, but we can see every time it dropped below 120, it popped right back up. And that's been the case pretty much every single week. It didn't test those levels this week because it's been going higher, but that is a good sign for Palantir stock. However, seeing that it is overbought, we can see that it is coming out of the Bollinger Band, and even looking at the stochastic on the weekly chart is at 94. So it's in an overbought area. So I personally may wait another few weeks or maybe even a month to see if it holds that $120 support level. And if it does, then I'll probably go ahead and attack, because Palantir does have some amazing premiums. But there's thousands of stocks to trade, so I would rather wait for the confirmation. However, let's head to Thinkorswim to see if I were to place a trade today, what would I do? All right, because obviously we know I am going to be selling puts. I am not going to be buying calls while it's already in this overbought area. So let's head to Thinkorswim. All right, so we're here at the options chain for Palantir. Same thing. I'm going to come up to 45 days out. So let's stick with this 35-day expiration. And then we'll come over to the put side. And we said that it was showing support at the $120 level. And at the $120 strike, we'll get paid anywhere between $292 to $298 right here, right now, for placing that trade. So that looks amazing. And that's just at a delta of 0.19. So that could work out pretty great for us. So if I were to trade the stock today, that's exactly what I would do. Well, ladies and gentlemen, that is it for this video. I hope you learned a lot. I hope you are prepared for next week. And like I said, if you would like to join the Trader Freedom community, the link is in the description below. Come join us. We would love to have you and watch your transformation. But that is it for this video. I will see you guys on the next one. Peace!